Good evening, everyone. Today's topic, let us understand, is dividend good or bad? Should we need to really think of dividend, or should we need to really check whether dividend is a trap or what? Let's understand. So on a first point, I will just explain to you. Let's have a understanding. Dividend, who, why they are expecting in the perspective of FIIs and DIs and retailers. Who are all FIs and DIs, mutual funds, foreign investors, LICs, who are having more than 1 CR and capitals. Like they must be having 500 crore, 200 crore, 1000 crore, but definitely they are more than 1 CR capitals. Who are retailers? Retailers who are having less than 1 CR capital. Okay. And number of shareholdings. Suppose if any company like FIs and DIs, how many quantities of share they must be holding? Definitely they must be thinking of holding lakhs and more of shares only. More than 1 lakh or 5 lakh or whatever shares they'll be handling. Whereas retailers will be thinking tens and hundreds and thousands, maybe another 1,000, 2,000 shares they must be holding, or maybe in a subsequent, but they are less than 1 CR and 1.5 CR in that range only. So when it comes to the income tax, definitely FIs and DIs, which are capital is more than 1 CR, means you can just imagine they are definitely coming by default under 30% tax bracket. So by default, when they are 30% tax bracket, definitely every income will be counted and then accounted as a tax. So it is important point to be noted here. Whereas retailers, definitely they will be coming either 30% bracket, less than 30% bracket. The reason behind it, most of them are in the salaries in the, if you're talking about less than 10 lakh or 20 lakh or 50 lakh, whatever. So less than 30% bracket is very higher in terms of retailers. Next, if dividend issued, what will happen to this FIs and DIs and as well as the retailers? Let's understand. As dividend issued, by default, FIs and DIs are eligible to pay a tax of 30%. For example, if they are going to, if any company, X company releases 10 rupees dividend, if they are holding 1 lakh share, they are going to get straight away 10 lakh. If they are holding 10 lakh shares, straight away they are going to get 1 CR shares, right? Let's do that calculation as well. So by default, they'll be eligible to pay the taxes. Whereas these retailers are negligible. Anyway, TDS amount will get deducted while paying the tax dividend itself. So, and most of them are less than 30%. So it will not much impact in terms of dividend. They will be happy. Retailers are very much happy. I'm getting a dividend. Even if I'm having 500 shares or 100 shares, if I'm getting 10 rupees, I'm happy that I'll get 5,000 rupees, right? Same way, whereas retailers is happy and FIs are not happy because they're going to end up paying 30% tax. Let's take an example. A dividend, dividend per share, for example, is 10 rupees. If any FIs and DIs holding 10 lakh shares and multiply by 10 rupees, they are going to get minimum 1 crore. Meaning what? 1 crore income they will get directly to their account. Whereas in the retailers, 1,000 shares, even though if they are having as an example, and even 10 rupees per share, it is going to be 10,000 rupees, which is very minimal, but they will be happy still, right? Because their investments are very less. And if we look after the further calculation, 1 CR dividend income minus directly 30% tax, they are going to get 70 lakhs. So they are like, what? Directly I'm paying 30 lakhs here for a dividend. Apart from this, they will also be paying taxes from some other mode as well. But this is one of the mode where it will directly take out your 30% of your money, right? Whereas here 10,000 rupees minus tax is very negligible amount. So retailers are not worried about it. Whereas FIs and DIs are much worried because they are ending up paying more than 70 lakh, getting 70 lakh for 1 crore. Imagine if they're having 10 CR, then they'll be paying minimum 3 CR. It will be going away from the taxes, right? So that's why the dividends are important for only retailers, not on the FIs. Let's understand even more deeper calculation, how exactly we can correlate this information. So now let's understand who is smart, FIs or DIs or retailers. Reason. As we discussed above in the previous slide, reason, FIs and DIs are definitely not interested in dividends because they are straight away going to pay the taxes. And retailers are always excited for small dividend or small additional money. If it comes, they will be excited. Apart from salary, even if they get some 500 or 1,000, they'll be excited. So definitely, no doubt about it, there are excitement. Coming back to this FIs and DIs and retailer interest, what are all those interests? FIs, DIs wanted company to invest profit back to earn more from it. FIs, DIs, they wanted company, like say suppose if you take any company who is in the stock market who issued the dividend, they wanted to pay back to the company as an investment, and then they should earn from it, not from the dividend. They are not interested in getting the money from dividend. Instead, let them pay back. Whereas retailers presume that if company is paying a dividend, that is a good company, they will think. For example, if you take a DMart, it's well performing, they are not even paying dividends. Is that a bad company? Not at all. The thing is, FIs and DIs are not okay with getting a dividend. They are happy if they're not getting a dividend, but company is performing, company is putting back the money for earning additional money. So it's important, right? And repercussions in terms of FIs and DIs and retailers or impact. As soon as the dividend record date nearing, or say suppose if the dividend date is, I'll give you an explanation along with this also. FIs and DIs will continue to exit the positions because they don't want to pay the additional 30% tax. They'll continue to exit the position. Whereas our retailers, as soon as dividend record date is nearing, retailers will be taking the positions. This is what the difference between our retailers and as well as FIs and DIs. Okay. Let's understand the stock behavior. Just before record date or after the record date, stocks will fall drastically. Retailers' calculation is that at least they are getting a dividend money. See how small we are thinking, retailers, right? And lastly, who is smart investor? Undoubtedly, FIs and DIs are the smart investors. We don't have any second thought about it. Always, we retailers are in the stock recovering and temporary profits mode. Let's change the thought. Let's take an example of IRCTC dividend example recently happened. Okay. IRCTC has announced the dividend on 22nd February. That is, dividend record date or ex date was 22nd February. So ideally, what is our retailer thought? Oh, dividend has issued. I will take a position so that I'll get dividend money, 3 rupees 50 paisa. If I have 1,000 share, I'll get 3,500 rupees. They are thinking like that, right? So whereas retailers are, FIs and DIs are not interested in it, but still retailers are happy. So what they will do, retailers will pumping the money to the stocks to get that money, right? Let's understand the next step, what will happen. This is an example. 22nd was the dividend record date. Our friends retailer has invested this money, stock has got into this level. At the time of dividend date also, it is almost around 642 rupees. As soon as the dividend record date is over, it has fell by 20 rupees. And a small price action. Again, see the depth here. It has touched 560. So till 21st February, IRCTC was trading at 642. Retailers was very much happy. Let me take this. Very next day, which is a record date, that is 21st February 2023, stock fell by rupees 22. Retailer anyway it will get recover. They will be thinking of recovery mode. But after 10 to 12 trades or 15 trade sessions, look after this. 560 level it has reached. Where is 642 and where is 560? Almost 80 rupees is gone. So retailers definitely will lose the control over it. Right? So finally, what retailers are thinking? Retailers are thinking, okay, finally retailers are thinking for a recovery plan, like averaging or exiting many ways, right? So this is the, don't you think so? It's the biggest trap for expecting 3 rupees 50 paisa money I've invested here and ending up with this kind of a big trap from 640 to 560 and still it is going. I really don't know how many days it will take, right? So it is important for you guys to understand whether you should choose these stocks or not for a dividend. Is it a right time to enter before dividend, after dividend? All these things are very much necessary and ideal examples to take over. So for more details, click and subscribe our channel. Thank you for watching us or reach us for more details.